Hey, welcome back. It's August 22nd and I'm in one of my Friday walking videos, so here are the updates that I've seen this week. So let's kick off with the first piece of news around the South Korean government orders crypto firms to hold new lending products, citing growing leverage risks. Concerns that retail investors are taking on unsustainable debts, echoing 2021-22 blow-ups. You're familiar with the FTX fraud. For investors, this could tighten liquidity and slow altcoin momentum. This could actually pressure CeFi business models in the region, in Asia, and push users towards DeFi alternatives. Now, this makes sense because whether there is abuse or an overusage of a particular product, we are starting to becoming more familiarized of the notion of crypto lending products on crypto exchanges, crypto platforms. Now, this basically, what they're trying to offer here is to entice and draw the capital wealth and the digital asset holdings from investors on their crypto exchanges under a custodianship arrangement for the purpose of loaning out those coins to its customers for the duration of a loan. That's what the crypto lending products are all about. And in return, they will provide a yield, an interest payment, usually on an annualized basis, right? Well, they're trying to preempt the abuse of that by depositing an amount of their asset holdings in order to take out increasing amount of fiat loan or indeed other crypto assets, crypto tokens as a result. This is like a preventative measure, which is standard practice. This is actually no different in terms of how we take out a mortgage loan based on our securitized assets as an underlying. Right, so this is no different. So this is like a precautionary measure which the South Korean government is doing, and this is responsible just to try and prevent any excuse or any potential blow-ups downstream, and particularly try to avoid the next subprime financial crisis around the corner. So I find this a very positive move from the likes of South Korea. Now let's move on to the next piece of news around the US Treasury Genius Act consultation. Now, the US Treasury is shaping the future of crypto oversight by gathering views on illicit activity and stablecoin risks. Big investors need to watch. This could dictate which digital assets institutions will leave in touch. Now, we're all familiar with the recent approval and ratification of the Genius Act bill in both the US Senate and the House of Representatives in the previous month of July. And what they're trying to do is that they're now trying to take it the next step further in terms of how they can actually, in practical terms, implement the acts, who they're going to actually target in terms of the private issuing firms that are going to be responsible ultimately for issuing these stablecoins on the US Treasury behalf. And we are starting to see some draconian or some tentacles from TradeFi, from the government, in terms of how they would expect these private issuing firms to behave and conduct the stablecoin issuers based on the US dollar underlying. So it's just something that the investors need to be wary about, because I have always explained that the stablecoins should never be treated as a store of value long-term investment, precisely because underneath that it's run by the Fed, by the central banks, and ultimately by the governments. This should only be used as a way of conducting our day-to-day commerce. So we should be treating it as a medium of exchange type of asset, not to be treated as an investment vehicle where we expect to receive a return for that. So just to be mindful about that. The next one on the list is continuing on the theme of the US Treasury. So for the first ever on-chain US Treasury financing has completed on the Canton network with major banks and asset managers. Now this shows real-world assets, RWAs, are moving from pilot into production at an institutional scale. This positions Canton as a serious Wall Street grade blockchain for regulated finance. Well, this one is all about how we can tokenize certain physical analog wealth, in this case US Treasury bills, on the blockchain, specifically on Canton network, which is very, very interesting. And I expect this momentum and this move to be replicated by other Treasury blockchains. We're going to be doing the same thing, because when we see a healthy competition of several of these blockchain initiatives involved in tokenizing RWAs from the physical analog wealth into the blockchain realm, which is what real world assets tokenization is all about. Well, this is going to provide a lot of opportunity, not just for the fintech players who are going to be ultimately responsible for taking the charge in tokenizing these US Treasury or even any other foreign Treasury bills on the blockchain. This is going to create a lot of opportunity, a lot of capital drawn into this space in the long term, which is why I've always explained the estimates of a multi-trillion-dollar industry on real world assets tokenization alone by 2030 to 2033. There's going to be $16+ trillion market cap that's been estimated just for real world asset tokenization by the year 2033 or thereabouts. So parking some of your portfolio investments into some of these interesting real world asset tokenization coin projects makes sense. The next one is to do with, which I find very interesting, and it's continuing on the theme on stablecoins and the Genius Act that I mentioned earlier, is to do with the Wyoming state have actually launched their first US state-backed stablecoin across 7 blockchains. Now, if this were to be successful, it could actually disrupt private issuing stablecoin firms like Circle and Tether, which will open the door for other states in the country to compete in digital dollars. Now, again, I'm always a huge fan for healthy competition, and I'm certainly anti-monopoly. So anything that draws in other actors, other fintech players, in this case, the public sector involvement, well, this makes total sense and will provide opportunity for all, because real world assets tokenization, of which stablecoins is a part, there's a lot of capital opportunities available and financial returns for everyone in this space. So I see this as a positive thing, right? To get some public sector involvement, not just leaving the private stablecoin issuing firms like Tether and Circle to take the center stage, even though there are leap heads in front of any public sector involvements, right? Because they've already put in the investments, they've already got the infrastructure in place, and the rest of it. But nevertheless, this is a good sign, and again should give you that bullish sentiment that we are heading in the right direction. We are digitizing into the 21st century digital economy, which this is the future, and it can only get more disruptive in the years and decades from now. Now, this leads into a couple of other announcements, and to do with some price action, crypto and Bitcoin. Now, we are seeing retracement happening. Bitcoin at the moment is in pullback risk mode, where it's actually dropped from 122,000 over a week ago to 114K, where analysts flag rotation into alts, mostly caused by the very short-term macro conditions. This is again all the more reason why you should always have a long-term horizon whenever you make these sort of investments. Above everything else, Bitcoin is a long-term hedge and a long-term investment vehicle. It can't be used to capture speculative gains in the short term, right? We have the equities and the dinky old stock for that, if you're into that game. I'm certainly not. I'm a believer in long-term investments, and to ride out any storm, whether it's black swan events, macro-driven, unilateral policy decisions by government officials, you need to weather all of that and become a more resilient, more intelligent investor, driven by your own high rate of conviction of your investment decisions, and see it into the long term. That would be my advice. And finally, there's been a recent surge in hash rates in the Bitcoin network, where the Bitcoin network security is up 4% in August, where the miners are feeling the squeeze. And in fact, I just came back from a trip from Iceland, which I will drop a link to that video, which I'll encourage you to watch. It's a rather interesting take on what I've learned during my 4-week trip in Iceland, where I see tons of opportunities for Bitcoin miners particularly to establish their rigs and mining operations in the country. So I encourage you to watch that video in its entirety. But it's no surprise at all that irrespective of all the pullbacks we're seeing on Bitcoin or in other digital assets, for me particularly Bitcoin, being the king of all cryptos, is heads and shoulders above all other digital asset tokens. And this is all the reason why I have a high rate conviction over Bitcoin returning back to its all-time high, and also to have further upside. So I don't think the bull cycle has actually ended by this slight retracement of the Bitcoin price at the moment. I'm still seeing analysts steadfast on their original predictions between 180 to 200k Bitcoin price by the end of this year, 2025. So again, there's a lot of noise going on. There's a lot of volatility driven, as I said before, by these very short-term macro conditions. We should be completely divorce ourselves from that noise and just stick to our own convictions. Now, this is the best performing asset we've ever seen in our lifetime, and we're going to see it explode in the months and years ahead. So having that long-term horizon is really, I can't emphasize how important to retain that long-term vision and not to use it as a short-term speculative vehicle. So that's what I'd like to discuss with you today, and the message still remains the same: invest wisely and invest in Bitcoin. Until next time.